Hello and good morning. You guys know James by now. He's here with us. Thank you for joining us, James.
Thank you for having me.
Today we're going to talk about what the impact of this COVID pandemic has on the lending business, the mortgage business, the broker business, right? People who are borrowing money, federal rates and all that. So with that, I'm going to turn it over to James. James, my first question to you is that, how has your business changed right now because of the pandemic? Do you guys see any impact?
Well, I would say this is naturally home buying season here now as we speak. So we are seeing some impact in terms of some delays and of course a lot of guideline changes. However, in terms of, I'd say, the traditional flow of business, for the most part, things have kind of stayed the same.
Stay the same? Okay. So because of the pandemic and perhaps the economy itself, I could see the rates going up and down. So can you talk a little bit about that?
So the feds have met a few times since this pandemic has started, and they've agreed that they would like to keep rates where they are. I heard through 2021, but no one knows what the future holds, of course. I'd like to say staying on top of things, being able to watch rates as they're adjusting is huge, right? Because, I have access to a few programs where it gives me updates throughout the day, and we have seen the markets kind of fall and rise again, within a matter of hours. Learning the things that are what's impacting the market, why are rates doing that? And I think that's key, that a lot of people don't necessarily understand why or even how to counteract that.
Great. Yeah, that's good to know. Now, if I want to lend, if I want to get some money, I'm buying a house or investment property, do I need to wait to lock the rate? How does the locking part work for the rates?
Right. So technically you cannot lock an interest rate until you physically have a property or you're under contract. So I know we've seen a lot of volatility, and I've actually been asked this before. And I'd like to explain this really in detail.
Sure.
There are some brokers out there or some financial institutions that will allow you to lock an interest rate in advance for finding a home. However, with that being said, there's always some sort of cost associated, right? So I know I've seen Quicken, for instance, say, we can lock you in for up to 120 days. You're going to pay for that. The question is exactly how much.
Wow. So audience, this is something you should know. If somebody's promising you to lock the rate in advance, there will be a fee, there will be a cost associated to it. So my next question is that with the rates fluctuating, like you said, sometimes by the day or even more, do you think it's a good short-term strategy versus long-term? What kind of impacts it can have? Should I wait for the rates to go further down? Should I lock it in and find the property and go for it? What is your take on that?
Well, I think if anyone knew specifically, the time, where the market would fall or rise, we probably wouldn't be here what we're doing, right? You'd probably be out, gambling your luck on something else. However, with rates being lower than over the last 10 years or so, I think now's a good time because it affords you more home. I've seen it in a lot of scenarios where you could benefit from 3 bedrooms, but that puts you in a different price range, so you can really only afford 2. In this particular case, because rates have been lower, it makes getting a few more of those luxuries or things that you wanted a little bit more in reach, because now your payment will be that less.
That less. Okay. Well, that's good to know. Now, are you seeing a lot of surge of refis and home equity line of credits that are coming your way? And if so, how does that impact you again as a business?
I'd say a refinance is a little bit deeper than most people think, okay? A lot of people think, I was at this interest rate of 3.75, rates have fallen. I will say a lot of my clients who are refinancing now, and when you hear these astronomically low interest rates, they're on a 15-year mortgage. You always have to read the fine print of whatever advertisement you're seeing. So in some regards, some people's payments might actually increase a little bit. However, the interest rate decreased. Maybe they decreased the term, right? So therefore, in the long run, you're going to save a lot more on your mortgage payment over the life of the loan, versus these may not be savings that you directly see today. We also have to take into the accountability number 2, closing costs. When you do refinance a mortgage, there are closing costs available. Just like when you first purchased your home and you had to pay to close the loan, you will have to pay to re-record your mortgage, is the best way to put it. So it's really good to have a firm understanding as to what you're paying, why, and to whom.
Right, that makes sense. Now, when I'm buying a house or purchasing an investment property, I need to understand, what's the value now, what's the appraisal value, and so on and so forth, and also what's the appraisal value after I repair the property or fix up the property. Can you talk a little bit about, the ARV versus appraisal value, and how does that come into the picture in terms of your calculations?
So there will always be an appraisal done with a property, okay? Any form of transaction, okay? Sometimes in refinances, they're not necessarily looking for a full-on appraisal. I've seen some exterior onlys, right? And I've seen that happen with a lot of purchases lately. Now, the best way to think of this is, any home has a perceptive price, okay? And now, what we're seeing a lot, and why I say that things have kind of stayed business as usual, given that it's home buying season, you're hearing it everywhere. There was a home just 2 months ago in Falls Church that received 30 offers. So with that being said, that home could have been on the market at, I don't know, what's 535 or so. However, you're receiving 35 offers. There are going to be a lot of people bidding over the actual asking price. And that's what brings you to the market value, right? How much is the market willing to pay for this particular home now, right? We all do this with any sort of commodity that we're after after to buy, right? So it's always important to look at how much is the home worth versus how much is the market demanding for it.
So if someone gives an offer, that's an interesting point you mentioned. If someone gives an offer way like 10, 20, 30,000 over, or maybe more, can the property even appraise for that value?
In a lot of cases, I think that the market is very realistic. Yes. And there's been lots of measures put in place to keep from another 2008, 2009 type of scenario, right, where values just got way out of hand, things were inflated. So, the key that I'm hitting here is there will still be an appraisal done on the property, an evaluation to check the value and make sure that the value is keeping up with the market value. If you're ever in a situation where there is a difference, unfortunately, you'll never be able to have a loan for more than what the home is worth. So that difference, you, the purchaser, or would be responsible with coming up with that.
Yeah. One of the questions I always get is that why can't I just go to the bank myself and not to why do I have to go to a broker or a brokerage firm to do business with? Or
first and foremost, a bank can do a lot for you. You can walk into your bank, you can get a checking account, you can get a savings account, you can get a credit card. You may even be able to get a auto loan, personal loan, depending on who your financial service provider is. But one thing is for certain is banks are always lending out funds that are insured by the FDIC. Those, as we're going through COVID and this current pandemic, we've noticed that a lot of those guidelines have become a lot more strict. Just recently, Wells Fargo announced that you cannot purchase a jumbo home, right, without $1 million in assets. Well, here in Fairfax County, that's a lot of the homes fall into that category. So you mean to tell me if I had $1 million, why would I even consider taking out a loan? So with that being said, their guidelines have gotten a lot more strict. It's harder to qualify. Work with a company that just specializes in mortgages. We have way more down payment options. Our rates are extremely flexible, and a lot of times they are a lot better.
So James, oftentimes we get asked and we get proposed a 15-year, 20-year, 30-year. Can you shed some light on which one should I be getting for my house?
That's a very unique situation. When you think about it, okay, you were initially saying that, I'm going to pay for something over the next 30 years versus now I'm going to pay for it over the next 15. So, of course, a 15-year mortgage will cost you more, right? Because the time in which you have to pay it off is a lot less, okay? But when you talk about savings, that's the value. The good thing, or one thing I'd like for you to think about is you can go to the ice cream man outside, okay, and buy one ice cream cone, right? He's delivering it to the door. He's came here. He's driven through your neighborhood. He has ice cream. He has gas, so forth and so on, right? So that one ice cream cone may cost you $5, right, okay? However, you could go to your closest grocery store and probably buy a whole box for $6.50, right? Don't you see the value in that? Okay, I'm paying $1 more, but I'm getting way more than just one more, So I'd say look at your scenario as a whole. Think about where you want to be long term. Real estate is a long term thing. It's not necessarily a short investment or a quick flip in some cases, okay?
Yeah, and I think that's something James keeps telling me, that think about long term, think strategic. Even a 15-year loan is not a 1 or 2 day loan. It's a 15-year commitment.
Right.
Same thing with 20 and 30 years. So if you want to keep your payments low and you have other bills to pay, a third year makes a lot more sense. But if you want to be aggressive and you have the cash available, your monthly payments might be higher, then a 15 or 20 year might be a better option for you. So it depends, like James said, he's the expert. It depends on individual situation. For most investors, I think keeping the payments lower for the mortgage and your rent is higher for the person renting your property makes a lot more sense, because you're getting more cash flow, which means you can take that money, invest it somewhere else, right? And that's why the professional brokerage and a broker comes into play. A bank will not provide you with these options that James is talking about. They have standard programs, standard cookie cutter programs that they'll offer you, but beyond that, they won't be able to structure a deal. Someone like James and his company can structure a customized deal for an individual for your purpose. Okay. So James, the current market, where do you think it's going? What's going to happen? I mean, in the next few months. I know you don't have the crystal ball, but what do you see the updates coming in, and what are they telling you? What are the trends?
Well, I'd say it's no secret. Everyone knows that this year's an election year. And I think November 2020 is going to speak volumes as to our country moving forward economically, which is what, of course, we want to see, right? Everyone wants their 401ks to go back to growing. Everyone wants, to see a little bit more stability in our economy. So I'd say let's get through this upcoming election. We'll see how, whichever administration takes over office or retains office, however that works, we'll see about some of the policies that they put in place and how that will affect, us as a nation long term.
Yeah. So due to the pandemic again, are any of the terms changed from Fannie Mae or Freddie Mac that you see that can impact the consumer buying the property?
So we're seeing changes in regulations every day. Okay. I would say nothing has been dramatic, right? Where I think it makes, a huge difference in whether or not you would or would not qualify for the home. By now, a lot of experienced mortgage professionals, such as myself, have probably been conditioned with a lot of these new changes. Knowing what they are, knowing how to circumvent them, and finding the best resolution that fits your budget, work with someone who's got that figured out, and I think I do.
Okay, great. So James, do I have to put more money down or less money down because of the rates and the market and the pandemic?
I would always say that stayed the same. Whether you're going to go FHA, that's 3.5%. If you are other first-time home buyer programs, that could range you from 3 to 5%. In your particular case, when you're usually purchasing for investment, that requires 20%. Those things have not changed.
Have not changed.
Not with traditional mortgage bankers and brokers such as myself.
Great. Those are some really good points. Well, we want to thank you guys for tuning in with us. We're just giving you information to empower you guys to make the right decision. Go to makeitrain.net. Check out our Instagram at Council Capital, and James will give you his handle for Instagram.
Check me out on the DMV Mortgage Dude across all platforms, or you could always reach me at www.caliberhomeloans.com/JAddy. Thank you.
Thank you, but nice seeing you.